Hello and welcome to Crux Investor. We spoke earlier today to Stephen Biggins, who's the CEO of Core Lithium, ASX-listed lithium developer, significantly advanced with assets in the Northern Territory. If you want our feedback on that conversation and indeed the company itself, you can find that at cruxinvestor.com/club, where you can also find detailed company reports, commentary from market experts from around the world on a variety of commodities and companies. You can find training videos and summaries of other interviews that we've done. And of course, there's a thriving community of investors sharing their thoughts and ideas with each other. And if you go now and sign up for the waitlist, you qualify for a 7-day free trial. And of course, we'd love your feedback too. So do give us a like, leave your comments. And if you want to see what we talked about, take a look in the description below. Stephen, how are you doing, sir?
Yeah, very good, Matthew. How are you?
Yeah, not bad. We tried to do this last week with technical difficulties, didn't we? But I think we've overcome. We're back again.
I think it's about the fifth sort of communication platform that I've sort of used in the last couple of weeks. Each one has its own sort of subtleties.
So we're going to hear your story today, Core Lithium story today. But first of all, so where are you in the world?
Yeah, so we're based in Adelaide in South Australia. So our corporate office is in Adelaide. And our project and our operations office is in Darwin in the Northern Territory.
Ah, fantastic. Okay. Well, is all well there? Are you? Because I hear you're all coming out of lockdown and everything's fine, back to normal.
Yeah, we are the lucky country. Both South Australia and Northern Territory haven't had any new community cases for quite a long time. So we're the operations, both from our ability to travel back and forward between South Australia and the Territory, is quite open, and our ability to operate and do things. It certainly feels like it's almost back to normal, but still, sort of underlying sort of apprehension, if you like, about what's happened globally. Well,
good. Okay. Nice. It'd be nice if we can all get back to work. So look, we're going to talk about Core Lithium today. But first of all, can you just give me a 1-minute overview of the business, not the sales pitch, but just tell us what you're up to.
So Core has been developing the Finniss Lithium project near Darwin for the last 4.5 years. We've brought the project now to a point where it's construction ready. We're working on optimisation of the project right now, ahead of completing a definitive feasibility study in the first quarter of next year. And we're working on a number of offtake deals at the moment. We're having offtake interest from all over the globe for our high-quality lithium product.
Yeah, I mean, you're a significantly advanced project. It's a small project, but it's quite advanced. But lithium's been a bit of a dirty word in Australia as far as investors are concerned for about the last 3 years.
Yeah, it's been a challenging market to work in for the last 3 years as the commodity price itself has decreased. And I think we're at a point now where we're seeing most operations in Australia, unfortunately, being unprofitable. And there's recent news today of an Australian lithium miner going into administration. So, that is in the context of very strong themes globally around EV growth, around growth and recovery in the global economy through support of zero emission and low emission economy going forward. So, for the Green Deal, for example, in the UK, in Europe, as being a really strong driver for the need for the new lithium supply in the future. So we're well placed to meet that need, but the market's been tough for the last two or 3 years.
Is that why you segued off into gold?
We've been having some success with our gold exploration in the recent months, but really that's come from having a bit of thinking time during COVID. So our geologists earlier in the year actually had a little bit of time with the data that we've collected from the project, and what was some interesting gold numbers that we'd sort of picked up over time with a bit more sort of assessment is actually building into something that's quite coherent and substantial. So that's certainly of interest to us at the moment and to the market. But we're very much focused on delivering Australia's next lithium project.
I'm glad to hear it. But let's just talk about the gold stuff so we can understand it, why you've chosen that route. So you've acquired Buy Now from Liontown Resources. Why spend the money on that? Why not spend it on your lithium project?
Yeah, so the acquisition of the Bino tenements from Liontown was really part of a consolidation story that we've had as we've built the project over the last few years. So just to give you some background, the Bino pegmatite field has been mined for tin and tantalum for over 100 years, and by Greenbushes back in the 1980s and 90s. So Greenbushes were operating there as a central processing facility, and that history is not unlike most of the large lithium deposits around the globe. And obviously Greenbushes is the richest lithium mine in the world. Really what Core has been doing over the last 5 years is consolidating the old Greenbushes tenure back together. So the old mining tenements and the old exploration tenements that Greenbushes had. So part of it was putting deals together with privateers, pegging our own ground, and probably the last sort of piece of the puzzle was the acquisition from Liontown, who had also been actively exploring and drilling for lithium in the area as well.
So from the moment that you announced the deal with Liontown to buy up that package to now, share price hasn't moved. So, are you seeing some sort of future value to the process you're going through now? Because there certainly isn't any value created now, and you've handed over $1.5 million.
Yeah, so that 1.5 million was the last payment, if you like, to Liontown. So the deal itself we completed 2 years ago, and we've been actively working on that tenure, and that's added significant resources and reserves to the project, as well as has given us access to the large water storage facility that Greenbushes built in the 1980s. So it's been a very value accretive deal, and good for Liontown and good for Core.
So just on the gold project, you're going to continue working on that for now until you see some sort of movement in the lithium market. So you must have a view as to when you think the lithium market's going to get to a point where it becomes a bit more relevant for you to spend more time on your lithium portion of your projects.
Yeah, we're actively resource drilling on the lithium resources right now, Matthew. So we're still very much focused on delivery of the lithium project. And just going back to your sort of point before about the sort of the share price and the deal with Liontown, I would suggest over the last financial year, and even in the context of a significantly decreasing lithium price, that the Core was one, if not the best performing ASX listed lithium stock over the last financial year.
How do you measure
that?
So
we kicked a lot of goals.
How do you measure that?
Share price at the beginning of the financial year and share price at the end of the financial year. So we had a very good year, which reflected the fact that we kicked a number of milestones on the project. We got full approval from the Northern Territory government. We signed our first offtake deal with the European party, and increased our resources 50% and reserves by 150%. So we kicked some significant goals.
No, I appreciate you've done a lot, but in terms of share appreciation, unless all the other lithium projects have gone down, your share price hasn't gone up too much. 4 cents at the beginning of the year and it's 0.48 now. If that's the measure by which you're quantifying your success, I'd argue that it hasn't exactly been stellar, but what you've done is significant. Hasn't been recognized, but what you have delivered, a lot of things that you said you would deliver, and you've delivered them on time, and you're managing your cash flow. So I definitely agree with you on that. So do you think that the market should have recognized you more than it has done?
I think there's been a level of recognition, but it's been in the context of the underlying lithium price moving from $950 US to $350 US. So, keeping our head above water share price wise has been a real achievement. But I agree, there's a substantial amount of value in the potential value in the company, particularly when we if you look at the revenues of the project, which should be in the order of $160 million per annum, and our market cap is about 50, and we've got one of the lowest capex lithium projects in Australia. There's a lot of upside, but there needs to be that confidence, if you like, with investors to come back into the lithium sector.
Okay, so and just finish off on the gold. Okay, one last question, which is,
sure,
how much value are you attributing to it? So your market cap's around, 47, $48 million today. How much are you attributing to the gold project?
Yeah, I think at the moment it's early stages, but what we're seeing is some very, very exciting results. I would say within a matter of weeks of us. Our geologists not only looking for lithium, but putting their gold goggles on. And we're finding some really exciting results, and that includes, seeing visual gold at surface, some pretty significant numbers. And we think it's pretty exciting. It'll be exciting for our shareholders moving into 2021.
It's also confusing. So what's the plan with the gold? Because you're a lithium company or a gold company, different sets of skills required, one more technical than the other. And gold's up. There'll be no shortage of buyers if you keep delivering results like you did in September of grades of over 100 grams.
Yeah, so the aim is to keep adding value to the gold projects, essentially until we're launching the lithium project. And then at that point, it seems sensible that those sort of asset suite would sort of move in their own way. We've talked about sort of restructuring not only our gold, but quite a significant silver project that we have in the Northern Territory in 2021. So we'll look at that strategy and that restructuring when the timing's right and best outcome for shareholders.
I guess that's what I was trying to work out, how much value you're attributing to it, and how much more time, money and effort do you spend on the non-core, gold, silver projects before you say, hey, come in and JV, hey, buy this, hey, spin out, and whatever your decision is at that point. Because the question earlier was really about, isn't it a just distraction from delivering your core focus, which is the lithium project?
Well, there's probably two things there. Is that we've set a time frame for completing our definitive feasibility study, and our objective to reach FID on the lithium project in 2021. The work that we're doing on the gold exploration in budget-wise is probably sort of not material, if you like, to budgets that we're spending on. We've got 2 diamond rigs drilling away on our resources right now, mining engineers, process engineers, metallurgists working on delivering the feasibility study. And the value that we're getting out of the exploration out of the dollars spent on exploration on gold, even though it's not material dollar value, we think it will add material value to the value of those gold assets and for shareholders.
Beautiful. At some point in the future, to be defined. Yep. Okay.
When we see the best opportunity and the best value for shareholders. Okay. We expect that sometime in 2021.
Okay, sometime next year. Brilliant. So let's get on to lithium. That's what we're here to talk about. You're in the midst of a DFS delivery for next year. So what can you tell us today about the economics and some of those numbers around the lithium project?
Yeah, Core is looking to build one of Australia's most capital-efficient lithium projects in the Northern Territory, and that really builds on 2 key advantages that the project has. The one, which is its location, and you'd like to call it good planning, but sometimes the rocks are just in the right place. These high grade and some of the highest grade spodumene deposits in Australia are located 25 kilometres away from Darwin Port in a straight line, and Darwin Port is Australia's closest port to markets in Asia. So the project has the best logistics chain to markets in Asia of any Australian lithium project. And also that location gives us access to infrastructure. So we have a high quality sealed road, which is 500 metres away from the mine and the processing facility. So it's already built and owned and maintained by government, and that links us directly to Darwin Port. It's licensed for quad road trains, So that feeds into a transport cost of only $7 US a tonne to move material from mine to port, and that's Australia's closest port to Asia. So we don't need to build camps. The project's 45 minutes away from the suburbs of Darwin. Airstrip, we don't need to build an airstrip. We're an hour's drive from the international airport. So all of that's that sort of infrastructure that's not needed, that doesn't hit our capex. And importantly, the second key advantage the project has is that we can produce a high quality DMS, a high quality lithium concentrate through simple DMS gravity processing. So that enables us to avoid the capex associated with flotation, and that's about 2/3 the capex. So you avoid all this capex plant. We don't need to build haul roads, no camps, no airstrips. So it feeds into a capex of around $85 million Australian, and we're producing 180,000 tonnes per annum of concentrate. So that's similar production profile to say Galaxy or Altura, or probably even more than Pilbara have been producing over the last 12 months. But a capex that's significantly lower, and then particularly a significantly lower debt burden for the project as a result as well.
Yeah, no, I like that. So tell me about the thought process at the beginning, because you've got a 7-year life of mine. I assume you expect to be able to extend that, but you decided to kind of go early and not kind of build a huge resource before delivering the DFS. So what was the thought process there? Why did you feel you needed to accelerate that time frame?
Yeah, well, typically, minerals projects, need to provide a certain sort of life of mine, sort of 7 to 8 years to sort of provide the length of mine, if you like, to finance the project. Based on our discussions with debt financiers to date, we think we've achieved that goal. I suppose what we're trying to do also is balance the amount of drill budget that's required to deliver a much larger resource, and particularly when the cost of capital is high, when the commodity price isn't going the right direction. We're trying to be as efficient and get that balance right, if you like, between very big drill budgets that might be expensive at the bottom of the market, versus delivering the project that's financeable. Ticks all the boxes right now.
Right. So, and I want to come back to that, the CapEx component, but talk to me about your or the team's experience at getting contracts, agreements, MOUs in place so you can raise that debt package, because that's what they're going to want to see. They want to see that you can sell this into market. Yeah,
sure. Yeah, we've had extensive discussions and negotiations with a range of parties all over the globe that have interest in our high quality lithium product. Just about every international party that's been to the project recognises the very sort of simple processing and logistics connection to markets, to overseas markets. Our earliest offtake deal was signed up with Sichuan Yahua, who are one of China's largest lithium producers. They've just built another 20,000 tonnes of lithium hydroxide conversion capacity at their Yarn plant. So we've got a binding agreement for about 40% of our production with Yahua, so 75,000 tonnes per annum. In addition to that, earlier this year, we signed our first offtake with a European party, so with Swiss-based Transamine of 50,000 tonnes per annum. And we're currently working towards binding agreements with Transamine. We've also more recently signed an MOU with another Chinese converter called Jinfeng for another 30,000 tonnes. And there are a number of other parties, not all of them in the headlights, and that we're talking to that may come to be part of our offtake book.
Okay, so you've got significant binding agreements in place, great, and you've got conversations with all the right people. Ganfeng, obviously, fantastic. What are you now able to tell us about the cost of the financing? You must have looked at that. You're looking for 85 million. How does that break down? What's the cost of that to you?
Yeah, so we're looking at a range of project, relatively standard project finance alternatives. There's a senior debt piece that we're working on at the moment that we're doing some soft marketing on right now, with the aim that we sort of really, sort of looking at that in with more certainty as we're heading towards FID in 2021. What we've also seen in a strong sort of background, if you like, to that sort of project finance is that strong movement for ESG investment and a mandate given to a number of banks, particularly European banks, that are interested in and are mandated and interested in financing projects that are going to be contributing to zero emission and low emission economy.
No, I get all that, but I'm saying, like, you're a small company. It's your first project. If you're doing these soft conversations, you must be getting sort of indications of what the cost of the money is going to be, because that's a knock-on effect for you. And I get the IRRs are quite good, but and as you move along and you get the DFS done, I suspect the terms will change. But are you seeing the sorts of numbers that you expected to see, or not?
In regards to the project returns, what we're looking at is actually a significantly decrease in cost of capital for lithium projects. What we're targeting is bank finance, so bank finance rates. Whereas earlier in the sector's life, standard bank finance wasn't available. Where it certainly seems like banks are much more interested in being involved in financing the lithium industry, and I think it reflects the ESG mandate that the banks have and their investors.
Okay, I guess we'll know more as you know more. You're in the middle of these conversations. You can't be that open about it. Australia and China relations not particularly good at the moment, certainly in terms of commodities and trading and so forth. So how does that affect the binding agreement that you've got in place now, or any discussions with Ganfeng? Does it impinge on it at all? Does it sort of restrict you in any way?
Yeah, we still maintain a good relationship with Yahua, keeping in close contact and regular communication. I would suggest that the Chinese customers are as connected as we are with the interest that's coming out of Korea and Europe. And other parts of the world, it can't be forgotten that currently that China is the processing hub for spodumene out of Australia currently, but we're also planning ahead, if you like, and our deal with Transamine is part of that, if you like, of being linked to current markets in China and Asia, but also positioning ourselves for the diversification of lithium supply chains globally, through Europe, the other parts of Asia and into the States.
Okay, I guess the point I'm trying to get at is, can the Australian government damage your binding agreement, because that's the basis on which funders are going to fund you, or do you need to have secondary options in Europe or the United States in those kind of EV ecosystems looking for lithium spodumene?
Yeah, I don't see those trade tensions affecting sort of real life contracts in the lithium space right now, and we're seeing continued trade and sale between Australian lithium producers and Chinese converters right now. So those contracts are well in place and operating. But what we do see, I think, is a diversification, if you like, of our customer base. Which is sort of going to be sort of matching, if you like, the diversification of the lithium supply chain globally.
Okay. How much cash have you got?
We've got about 7 mil cash in the bank at the moment, so we're well funded. As I said, we've got active resource drilling programs on at the moment. We're working on some mine optimisation and metallurgical work. So we're well funded. We've had our foot on the accelerator over the last 4.5 years consistently. The bones of the project are strong and are good and have attracted funding. So we've been able to continue to build the project towards being construction ready.
Does it get the DFS finished?
Yeah, so that'll enable us to complete the DFS, and really our objective is to be approaching FID with the funding that we already have.
Okay, fantastic, and that's sort of comfortably. You don't envisage any kind of need to raise any more capital next year just to make things comfortable.
Well, really, if we're looking to achieve FID, there'll be a big project financing that we're involved in.
No, obviously, but I meant as in terms of the 7 million gets you through to your DFS, at which point there's an FID to happen. But I'm talking about next year up to the delivery of the DFS, no additional funding required.
Correct, that's right. Yeah, it's well funded. It's funded, budgeted. Yeah.
Okay, what's your take on the lithium market? Because as I say, last 3 years, Australian investors haven't really cared about lithium. When do you think they're going to start noticing lithium again?
I think in the next few weeks, Matthew. I think from what I'm hearing, speaking to people, that the stockpiles are starting to diminish in China. I think particularly with 20%, 25% of Australian production being taken off the market in the next few weeks as Altura goes into care and maintenance. I think there's going to be a bunch of customers there that are losing supply. And even before that, over the last few months, we'd start to see more competitive interests for offtake, and that sort of the breadth of offtake, the jurisdictions that are interested are increasing. And Core is really well positioned in that we're one of the few projects globally that are construction ready.
So, I mean, obviously with the Piedmont deal with Tesla, with the lithium spodumene, I think that sort of brought things into the light a little bit as well. Are you having conversations with automotive manufacturers, or is it just metals guys?
No, we're having conversations all the way through the lithium supply chain. So not just sort of converters, but all the way through, to car manufacturers and battery manufacturers.
Okay, interesting times. Okay, so your message to existing shareholders is steady as we go. It's going to get more interesting the next few weeks. Next year we'll deliver the DFS, and you look at the amount of agreements, MOUs, and contracts we have in place. It's all good, no problems.
Well, what we have been able to do is build a really strong foundation for the project, fund it all the way through to a process now where it's de-risked, ready to construct, and we're in the right position at the right time for recovery of the lithium price and lithium markets. And I don't think anyone can doubt how strong the themes are now, and particularly even post-COVID, how strong the themes are towards global led recovery, contributing to a zero emission economy. So all of those themes are aligning, if you like, for the need for lithium for renewable energy storage and for lithium batteries for cars, and the need for new supply to be able to enable the growth to achieve.
Okay, so existing shareholders, they've bought the story, they're a believer, you've delivered. What do you say to new investors, people looking at the battery metals, lithium specifically? It's very confusing, it's very technical, market. So what do you say to them to get them interested? What should they be thinking about?
I would say it's time to reposition yourself back into the lithium sector. The prices are bottoming. Most of the forecasts and the analysts I'm seeing around the sector are saying this is calling the bottom. And Core is a very attractive position with a low risk project producing high quality lithium concentrates, and one of the most capital efficient projects in the world. Well positioned for the recovery in the lithium price. Okay,
one question sent in: have you solved the water problem yet?
We have a large water storage facility that's really came to us as a present from Greenbushes tin and tantalum operations in the area from 30 years ago. So there's a dam there and a large water facility.
That's
and
a
the
yes.
rainfall and
that's a yes.
Yes, correct.
Okay. And there's a discussion in the chat rooms, and I just sometimes it's just good to kind of deal with those. Well, actually, yeah, so one last one. So, what are the kind of red flags that you see that you've got to deal with and mitigate over the next 12 months to kind of get your DFS done and over the line? It's things that are perhaps out of your control.
I think, like the rest of the sector, we're going to be, market sentiment and is going to be affected by the lithium price. So, that's really, a large part of the puzzle that we don't have control over. But in regards to, the components of the project that we do control, completing the feasibility study, having offtake in hand, and preparing ourselves for project finance, it's really just about sort of, getting commercial license and working with our customers about when to deliver the project.
Brilliant. Stephen, thank you for your time today. We look forward to catching up with you again soon. Looks like there'll be lots to talk about coming up real soon. So stay in touch, pick up the phone.
Yeah, great. Thanks, Matthew. Appreciate your interest.